Welcome to the vault, where the noise stops and the real money conversation begins. This is not hype. This is not headlines. This is macros, metals, and markets, powered by the first ever AI-generated market recap. If you're here for the long game, you're in the right place. Now let's get into it. Long-term macro charts signal a historic capital rotation away from overvalued equities and bonds toward precious metals and commodities, especially silver and oil, driven by rising yields, inflation, and the end of a 40-year bond bull market. A bull market is when you go up in fiat. A bull era is when you also go up priced in gold or silver or versus another major asset class. This reframes true wealth gains as outperformance versus real assets, not just higher nominal prices. We're seeing the Dow priced in silver failing to make new highs, just like the late 60s, while silver is starting to destroy the stock market. The failure of equities to outperform silver signals the early phase of a major capital rotation into hard assets. Once this Dow versus silver line breaks, that's the super capital rotation event. Whatever price silver is at then, it will do much, much better after. The big upside in silver is expected after a key long-term support in the ratio finally fails, not before. People focus on the $50 blow-off top, but the real breakout was above $30 to $35, where the market closed repeatedly and real trading happened. Important resistance is defined by sustained closes and volume, not brief spikes, which is why the $30 zone was the true structural barrier, the measured move from the giant silver cup and handle points to at least $275. Five-digit gold and 500 to 600 silver come only after the big ratio breakdown. Classical pattern targets suggest huge upside, but the most extreme prices are tied to a later, climactic phase of the cycle. Oil has been coiling in a massive sideways pattern since 2007, a yearly close above roughly 70 to 75 points to $300 oil. A breakout in oil from its long consolidation would confirm a powerful inflationary commodity supercycle and broader shift to real assets. You have to have gold in your portfolio. Replacing a classic 60-40 with some gold makes you far better off. Even conservative allocation models now justify a structural core in physical gold as protection against monetary and market risk. The real bull era is when your assets rise not just in dollars, but also against gold, silver, and other major asset classes. Silver, gold, and oil are your core beneficiaries of an unfolding, multi-decade rotation from financial assets into hard assets. Consider reevaluating your portfolios in terms of performance versus real assets, not just nominal returns. That concludes today's recap. Catch us next time on The Vault.